What's going on, ladies and gentlemen? Happy Sunday, everyone, and I hope everybody had a lovely week of trading. And all in all, I hope everybody just had a lovely week. All right, so let's get into the weekly report. We will start off with the weekly charts, and we will get all the way down into the 1 hour time frame, and then we'll go over what we expect for next week and the following week, actually, because next week we'll be setting us up for the following week. So I'm hyped. All right, so to start off, we have our weekly oscillators hinged down. You have your stochastic crossing down, your CCI is hinged down, your RSI is hinged down. SPY, it's the same exact picture. Come over to IWM, same exact thing. DIA, same thing. You got, holy cow, you have so much room to fall here on DIA still. Whereas, like, look at this. That's crazy. Just look at where the oscillators are on all of them compared to DIA. So that is something I'm going to be watching. I'm expecting DIA to have a much worse fall there. Going off the weekly time frame. You have your stochastic starting to hinge up here on Mr. VIX, but again, like I've been saying, VIX's technicals really aren't going to be, they're not going to be too probable until we start seeing the market god completely take a step back, because they have, even on the red days on SPY, VIX is red too. So that is what's been going on recently. And yeah, all right. So this is why I have not been taking Mr. VIX too seriously. But we do have on the daily time frame, we do have this bullish divergence going on that started all the way back over here when we were at 27. Obviously now we're at 24.56. And I will say right now, it does look like you are going to be heading down a little more and carving out that well-defined bullish divergence there. But maybe we do have 2 more red days of Mr. VIX before it has its day, which will be on the 10th, because we do have CPI, and that will be exciting. All right, so going over the daily charts on QQ and SPY, we do have your stochastic crossing up here on QQQ, and you are crossing up on your CCI through the buy line. You are getting a technical buy signal if you use the CCI in the daily time frame. And then you have the same picture over here, except your oscillators did not take much of a fall. So honestly, what does this tell me, guys? QQ can be much more volatile than SPY this week. All right, we could see QQ rise higher than SPY. And that's just because the oscillators have given it much more room here. But at the same time, I also wouldn't be surprised if they rise the same and SPY's oscillators just return up here. Probably not for another point of divergence to form. I don't think we're gonna have another move like this. Like this would be a $20 move. It's not a $20 move. $13 actually. Yeah, guys, actually that's on the table in my opinion. I think that is very possible over the next 2 trading sessions, because again, midterms is the last day for the market god to do his thing. Which honestly could just be the dealers, honestly. I don't know. Maybe the dealers are in the politicians' pockets. I have no idea who the market god is. But I do know dealers make their money from taking money from other people. And the market god has been ripping faces to the upside. So that is something. Like, look at this candle. This is a beautiful candlestick. You got a... Oh, actually, we did not go over the candlestick. We have a dragonfly doji here on SPY and QQ. Or it is this right here, this Takuri line right here. Don't listen to this picture. Listen to this one right here. It's that one, and it's that one, and it is bullish continuation, test of performance, bullish reversal 66% of the time. Frequency rank is 28. That is pretty good. And theoretical performance, bullish reversal. So both of the possible candlesticks that we have formed here are both for bullish reversal. So just letting you guys know, the probability is high that we go up and confirm this tomorrow, and then that would also confirm further price action going into the next day, which is election day. So that is perfect. Now, we did have VIX close red yesterday with SPY, and we did get our green day literally the day after on SPY. So, I mean, that is now off the table, that probability. But, again, I still expect us to rise going into midterms. Something to note is you literally had this break and retest here. If coming over the 4-hour time frame, you guys can see that. Oh, actually, never mind. It's still, yeah, the lines, they switch time frame to time frame, so that's great. All right, so going down onto we'll make it all smooth for you guys again. Going down to the 4-hour time frame, you guys can see we do have this bullish divergence forming here on the 4-hour time frame. on QQQ CCI here. Oh, that was a very sloppy line there. Right there, as clear as they made that lower low there. But I will say, it's just like the VIX's picture. It looks like you can be going down. I mean, this is a divergence, don't get me wrong, but it's not something like this where you actually have these points of divergence. You just kind of have one straight line here. So I'm just saying, it does look like you can take a dive here, and that would put you right there, and that would allow that to do that, and then be something like that, and then you would go like that. And I do expect that to be in the form of this. I do expect you to gap down on Monday. I don't know if it's going to happen. I don't have a crystal ball, but let's look at it this way. I just said that dealers make their money off of taking money from other people. All right. Like literally, they really do only make money if they get to take your money. And we have a bullish ass setup. Like, I mean, I was even in calls. I closed out the calls, but I was even in calls off the setup. This is a really nice setup. And we had the what did I see it? What even made me buy in? I forgot what made me buy in. Maybe it was just us sitting over here. I have no idea. But yeah, I already took my profits on my calls, so that is that. That is that. And I am looking to reload puts, guys. But ultimately, I am also looking for that CPI play, for the strangle play. I am very excited for the strangle guys. We have another chance to test out the money printer. If we have our second successful test run with this, I'm going to be so excited. Ultimately, guys, I'm working my way up to having 10 test runs of our money printer. And guys, if we go 10 for 10, guys, that it is literally safe to say we can use these strangles on every single news event, and it's literally going to act as a money printer. That's the only reason I'm doing what I'm doing, and I think we're about to have our second successful run here on the 10th. And so here's the thing: I'm also going to be playing a strangle with the following Friday's expiration. Just because that is what I did this time as well. And even though they didn't print nearly as much, like not even close to as much, they still did print, and it's still a safe way to print. Now, I will also say CPI is going to be setting us up for next week's trading action. So, I mean, if it's bearish CPI, I'm expecting next week to also be bearish. I mean, until the next bullish catalyst setup steps in, which I don't know, we're gonna have to see. Maybe the next bullish catalyst that sets in is a bullish technical setup. All right, like that is also how it works. Okay, I either look for a bullish fundamental catalyst, you look for a bullish technical setup. Now, also keep in mind the charts typically do predict the news, so the perfect storm normally does come, and we normally get we get the perfect picture for buying into our position, which would be a bullish fundamental catalyst predicted by a bullish technical chart. So it's typically how I see it work, and I am looking forward to it most likely being the same exact way this time. All right, so your 4-hour time frame, you have that bullish divergence there, but you come over to your hourly time frame, and you have your CCI hinging down from the overbought region right here. So you're getting a sell signal here on your hourly time frame, which agrees with what I was just saying, how this looks like it could be going back down, and that would make sense with the dealers shaking out the calls that were bought. I'm not even gonna say FOMO calls, but I mean it is FOMO calls, but at the same time, I guess like the only reason any of us ever buy anything is, I hate to say it, but it's due to FOMO. We don't want to miss that move. Um, so yeah. But yeah, anybody who bought calls off this bullish setup, I think they're probably going to get shaken out because that's just what the dealers do. And that would also set it up for having a crazy day, because we can run 3% on Monday, but what if they do this? What if they drop you down 1% and then they run you up 3% and then you're up 4%? I'm just saying, dealers, they make more money if they create more volatility and they get to shake people out. The more reps they get at shaking people out, the more money they make. So I think they're gonna put in that rep first thing in the morning. But yeah, and then I do think you're going to be rallying into the 8th. And here's the thing: CPI is on the 10th, so you have a trading session in between those 2 days. And CPI it comes out at 8:30. So I mean 8:30 Eastern Standard Time. I don't know where you guys are from. I'm from Connecticut, so I've always gone off that time. But yeah, it'll be coming out before market opens, so we will need positions before then. So I will be I will be likely grabbing the strangle right before, because that's ultimately like I'm doing that specifically because I want to print. I'd like, or not I want to print. I want to learn how to print consistently, which the only consistent setup that I can see, I mean, not no technical setup at all. Just like, hey, I know volatility is going to be it's going to be produced here out of these news events. So the only consistent setup that I can like practice here is like, hey, you buy right before, you buy both sides, and that would just ensure that, hey, the more reps you get in here, the more reps you can do like every single time, because there's no differences here. But in reality, I'm going to tell you guys right now, the probable, I mean, here's also the thing. I might end up buying some calls. Maybe I'll enter the call side on the dip if we get it on Monday morning, because I do think you're going to end up rallying going into there. But all in all, I do want the strangle to work. Like it's not even an FOMC strangle, not the CPI strangle. It's just the news event strangle. I just want to be able to buy Friday's expiration right before the news event, like a day before, whenever that ideal time is, and then boom, I just get to hold until one side goes to zero, and then there you go. That's how I want it to go. But yeah, there's a chance I might buy the call side tomorrow morning. Obviously I don't make videos in the morning, so you guys will find out on Monday's video after market close, or right at market close, I should say. All right, so I think that pretty much covers everything. Now I want to briefly talk about, hey, FOMC. What was said last week that was just, again, so bad. All right, so bad, because it really was so bad, guys. It is not like nothing he said was bullish, and that really, like, I mean, that sucks for anybody who is having hopium flowing through their veins. It does, but at the same time, this is a harsh reality check for a lot of market participants here, and it's just how it's got to be constantly. And I constantly also need these harsh reality checks. Now, luckily on this time, I was on the right side of this. But what was I saying? Oh, so Jerome Powell, guys. Jerome Powell. All right. So Jerome Powell just like literally gave us no bullish news. All right. He said that there's no signs that they're tightening too quick. There's no signs that inflation is coming down. The federal funds terminal rate is going to be higher than what is already priced in. And there's one other bearish thing he said. I am just I am what's it called? I am having a brain fart. Sorry, it's early Sunday morning, guys. It's 9:30 over here. Yeah. But all in all, guys, he gave some very hawkish, some very just overall very hawkish Fed speak. All right, and then Fed speak isn't an actual thing. That's just what I call when Jerome gets up there and talks. Or anybody gets up there and talks, and they try and wow the crowd. But this time he didn't try and wow the crowd. He literally just like full on told everyone like, hey, oh, by the way, guys, this is what I was saying. They are significantly selling off their balance sheet. That is what he like. That's why I'd say, like, guys, he really tried being hawkish here. Like, you don't say these things unless you want the market to do a thing. Now, I think this is because, hey, inflation is probably going to be hiking up over the next few months. We come over to U.S. oil. Let's see if the charts are agreeing with that. Holy sweet baby Jesus, that's a big ass green candle, guys. That is massive. Look at the weekly time frame. You have room to run here on oil, and you've had this bullish divergence carving out for quite some time here. And as of this week right here, it ended up starting to play out. I personally think it is going to end up fully playing out. I think your oscillators are going to come all the way into the overbought region. And I personally think we're going to come back up here with oil. I think we are literally going to come back up here into the zone right here. Yeah, I think it's starting, guys. And that's just because OPEC cut, I think it's 2 million barrels per day. That started in the middle of last month. It literally just started. Or, no, not in the middle of last month. That just started early November. So we just started seeing that happen. Now, here's the thing, guys. We're not going to see that, actually, we're not going to see the pump get affected by that decision right there, like that action. Probably for the next, probably 2 to 3 weeks. But once it does start to, once it starts to show itself, show its true colors there, it's going to probably be rough, guys. We're probably going to see prices go back up to where they were before, which means U.S. oil is probably going to come back up here. And guys, that is literally just very negative pressure on the inflation battle, like straight up. I think Jerome was coming out so hawkish because he knows, like, hey guys, markets can't rally or the wealth effect is going to come back. We're trying to stop this whole spiral, this inflation spiral from happening. Speaking of a spiral, something he also mentioned is that they're seeing signs of a wage price spiral. All right, and someone asked him about this, and his response was actually kind of terrifying, and it was pretty much like, well, the bad thing about a wage price spiral is, like, you don't know you're, like, heading into one until it's too late, and then once it happens, it's too late, and, like, everything is screwed. Paraphrasing, obviously, but that's pretty much what he said. All right, like, straight up, it did not sound dandy at all. And that's what I'm saying. He made an effort to go hawk mode this meeting, and I think that is strictly because he knows what we're walking into, and it's what I've been talking about. All right, things are going to break, guys. All right, things are bad, and when they do break, the market is likely to panic hard, panic like real hard. That's when you have a moment like this. All right, I'm not saying this happens because we've had this long drawn out process here, and it's likely to continue this long drawn out process. But when things break, when something in the system breaks and there's widespread panic, you're likely to see the stock market sell off massively, and then you're likely to see the Fed do something to just pretty much strike confidence back into the Fed. All right, and I don't know what they would do to do that. I don't think it would come in the form of a pivot because, like I've been saying for weeks now, they can't pivot. They really can't. And the end of the world really is the only bull case. Like, there's no other bull case, other than, like, hey, everything will break if they don't stop tightening. And I still fully agree with that. But Jerome also came out telling us that like, he is going to keep tightening. But he also said that, like, hey, we will have to stop hiking rates at some point, and that some point could be the next Fed meeting. But then again, he just kind of, like, doused all of it in hawkish Fed speak. So yeah, all in all, guys, Papa Jerome went full on hawk mode, and I'm just saying the markets are probably going to start pricing that in after midterms, and I am excited for that. I will be gaining from that. I think my account is going to be surpassing its all-time high. Not all-time high. Well, eventually it definitely will be surpassing its all-time high, my net worth. But all in all, I do think my accounts are going to they're going to be at least restored to what they were back here by the time we come back down and hit these lows. And I'm looking forward to entering the puts. Now, I already am in IWM 165 December 30 puts. Those are currently, I think they're around $300. Pretty cheap for the time you get right there, and for, like, they'll be in the money. And we can actually pull this up real quick just so you guys can see my thought process on this. Come over here to IWM, and the gain is actually, it's just quite large, yo. It is just quite large by the time you get back down to lows. All right, so these lows are at 162. Let's come over here, December 30. I think I was looking at, like, a 200% gain. That's, like, pretty valid with this time, guys. That's a pretty safe gain there. All right, in my personal opinion. But yeah, I mean, you're turning a $300 contract to, by the time it gets it into the money, it's turning into $800 here. Say a week goes by. Now we're turning it into, let's say 2 weeks goes by. All right, so what's an in the money contract here? So now we're turning it into $700. So that's like 100, and we'll call it around 150% gain. But you get it $2 into the money. So because all time, or not all time low, but the euro low is 162. So we would be at the 165. So we're $3 in the money. We would come over here to this 181 strike. So yeah, they would be worth 850 right here, as long as 2 weeks goes by and we're in the money. So that's almost that 200% gain, guys, and that's just if you hit lows. Now, I think you're going to be breaking lows. I think you're going to break these lows over here. And I think you were going much lower. And guys, this is actually something that's pretty cool. IWM did not break these lows. I had no idea. I was not keeping up with that. But all in all, guys, I do think this is going to be something that it absolutely prints, and it's going to be done in a safe manner. Now, we come over here to SPY. I just want to show you guys. All right, I want to show you guys what I'm talking about. To buy that kind of time, all right, on SPY, it's rather expensive. And to, like, it really is rather expensive. Like, look at this. Yeah, you're buying the low on SPY. It's $500 compared to that $300 that we were just talking about. And then by the time you get down into the money, now you're at the lows again. Now you have an in the money contract of 376. So let's say the same 2 weeks goes by. You're over here, over here. 1255. So I mean the gain is, it's still like there. All right, it's just like, in my opinion, it's subpar. All right, and keep in mind, if we are crashing down, the IV is going to slightly hike up too, so the gains will be higher than what I'm showing you guys right here. But yeah, you go to around $500 per contract to around $1,200 per contract. So I mean the gain is still actually pretty significant there. But all in all, I do think IWMs are going to print more, and that's just because SPY is more expensive. But at the same time, SPY is way much more room to go down than QQQ. Like, you buy the low on QQQ, and this is also what I was saying. You buy the low on QQQ, it's expensive. All right, you buy it right there. What do we have? 254. Yeah, 254 is our low right there. You're buying, yeah, it's like $800 per contract. You get into the money. You're only getting that 50% gain. But also keep in mind, QQ will probably fall heavier than the other ones just because it is the tech sector. And we are already at these lows. So if the overall market is falling, then QQ will probably, it'll fall with the market, which means it'll be going lower. All right, guys. So with that being said, I think that's everything we really got to talk about. I hope everybody has a lovely week coming up. And I hope everybody just finished off killing this week. I hope everybody had a blessed week. And yeah, I will catch you guys next next video. I'll catch you tomorrow. Peace.